So, Michael, you can't do individual stocks, I get that, but the conversation for the Permian is going to be about how regional prices are so much lower versus Gulf Coast prices, as well as execution. What are you looking for?
Right. So, I mean, we've seen the Midland discount go out to $15, $20. I think that we're going to see more pain before this is all over, at least through the end of the year and into the beginning of next. We have a couple pipelines that are going to be coming on over the course of 2019 that's going to alleviate some of that stress. But overall, if you look at U.S. oil production writ broadly, outside of just the Permian, we're seeing growth in the Niobrara in Colorado. We're seeing growth in the Eagle Ford. So overall, we're still seeing production growth upwards of 1 million barrels a day next year just from U.S. Production alone. When you look at Canada, when you look at other places within non-OPEC supply, there's more growth coming, and that's not even getting into the growth that we still could expect to see from other OPEC countries into next year. So overall, non-OPEC supply growth is offsetting the expected increase in demand growth next year.
The cautious look. And in terms of energy stocks, Troy, I've come inside the Bloomberg. It's one of my favorites. It's just the disparity between oil energy stocks and what's happening with actual oil prices. Do you want to buy energy if you're at WTI at 70?
Well, for us, we've always looked at most of the energy positions we've had recently have been post-reorg equity plays, and fortunately we kept those very small because, coming out of post reorganization, there's a lot of technical pressure on the stocks. Furthermore, that valuation gap has been rather excessive over time. So we get the theory to have a catch-up play right now on energy services. You'll catch up to oil over time, and oil's trending higher. It just, from our standpoint, if you want to play oil, be long oil. If you want to play value, find other areas in energy.
Something that I feel like, Michael, we could start to see, and we heard it with Conoco, is some activity moving away from the Permian into other regions like the Bakken and Eagle Ford. Do you feel like that is a game changer? And I ask that because I feel like owning pure plays was kind of what you wanted to do, and then now you have to wonder if you want more of a diversified independent instead.
Right. I mean, I think that's possible. When you look at the Bakken, we hit record production levels, back to levels that we weren't seeing from 2014 and 2015. So Bakken is one. But yeah, I mean, it's hard for me to give a recommendation necessarily on one particular company in
sure,
one
of course,
particular play.
It's just sort of the macro backdrop for
yeah, the macro backdrop is one that is going to become more diversified, and the companies that do have that diversified set of assets are going to move their focus a little bit into other places while we get through this hard time in the Permian.